Joining us from Hong Kong to talk through some of these important issues is Chang, the Chief China Economist at Barclays Capital. Jian, it's very good to see you and welcome to Biz Asia America in this special edition. Let me start with the number of banks. They have cut their growth forecast for China in terms of the economy and GDP growth. Does that concern you, and what's your prediction?
Actually, over the past 2 years, we have been consistently below consensus on Chinese GDP growth forecast. This year, a month ago, we were the first, I think, major house that has lowered the GDP growth this year to 7.4%. So I think that's we have to face reality at some point, because Chinese potential growth, by our estimation, has already lowered to, I think, around 7% from previously 9 to 10%.
Well, I can tell you that one thing investors, like all of us, like to do is we want to avoid reality as much as possible sometimes. But give us a framework of why this is such a big deal. Somebody talked to me the other day and said, you know, why does it matter whether China grows at 6.9% or 7% or 7.1%? Why should the rest of the world care this much?
Well, I think investors have probably been somewhat used to China's growth at 10%, especially after the global financial crisis, when the Chinese government has implemented a massive investment stimulus, which really has pulled, I think, the emerging market economy, the commodity exporters, and also the global economy out of kind of a slump. So, but after that, China itself has been facing a number of issues. The property bubble, inflation risk, overcapacity, and also corruption. So that's why I think the leadership, the new leadership also is committed to not to announce big stimulus, but instead let market mechanism to play a bigger role.
Jian, one of the themes over the past 5 to 10 years in China has been the shift from exporting a lot of goods to the rest of the world to really buying the goods that they would normally make for the rest of the world, basically the rise in domestic consumption. And there's been a lot of criticism and congratulations that somehow this is working. And I'm just curious, in your opinion, do you think this shift to domestic consumption, is it going faster than you first thought, or do you think it needs to go a lot faster?
Well, we are actually probably a bit more optimistic on Chinese rebalancing story towards a domestic demand and consumption-driven economy. And well, but we also have to realize that would be a very long process rather than happening overnight. Because during the business cycle, it's easy to see investment to be surge and come down, and driving the growth during the cyclical period. But for consumption to play a bigger role, we need really to see a number of things happening. Household income growth has to catch up, and so that requires government improve income distribution. And also the government needs to set up the social security network to really make people feel more comfortable in spending. And another thing is property price. Over the past 5–10 years, the household consumption, in my view, has been way down because of the surging property price.
Jian, I wish we had more time here, so I've got time for one quick question to you. And you advise people with billions upon billions of dollars. But for the rest of us and the viewers watching, with a few $100s all the way up to a few million, what should the global investor do that's watching this program right now and they say, Jian, I'm worried about China, what should I do?
Well, I'm an economist, not a strategist, but what I can say is, as the government is genuine the economy towards more market-oriented, and we would be expecting more volatilities coming from China. And the latest fear of global investors is whether China will hit a hard landing, say this year even. But I think what I can assure you is that the Premier Li Keqiang still has his bottom line of growth, which I think was probably lowered to around 7% from the 7.5% previously. But the government is taking actions, and I think some policy support is on the way to stabilize growth, because that's really very important for the government to maintain the stability and also social stability.
Jian Chen, Senior Chief Economist over at Barclays Capital. Good to see you, and thank you for coming on the show. Have a good weekend.